The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to start today, like we usually do, taking a look at the German DAX and then also the FTSE, London, and then also, Germany first and then London. And then you'll notice we are making some, these are shorter-term charts, of course, but they cover the last 8 or 9 days. You can see they are making some type of a topping pattern, but how high they're going to go, we don't know, but you know what? Nobody else does either. It depends on how much you want to risk to see if that is a top. All right, let's take a quick look here at something that we talked about early this week. We talked about it on Monday, Tuesday, and we're going to talk about it today. Folks, here's what's happened. I've mentioned to you several times. I mentioned to you Monday, I mentioned it to you Tuesday, and I'll mention it to you today because it's right there on the chart. All you have to do is go and look at it. You'll notice that on Sunday night, we had that explosive move to the upside to 40.30. We then backed off 20 points. What did we do on Tuesday? We backed off 20 points. What did we do last night? We backed off 20 points. That's 3 days in a row that it's made 20-point corrections. The first time it goes beyond a 20-point correction, this tells you that something is going to be more significant to the downside. But for 3 days in a row, it's done exactly the same thing. That's another proof of this work that Andrew Lowe did on the markets repeat over and over again with great regularity. And that's why, even though there is chaos, within the chaos are non-random patterns that repeat over and over again. So if you can do this work yourself, you do not have to be a rocket science to do it. Now, if you remember yesterday, we were talking about the possibility when we were looking at this ABCD here in Apple, and I wanted to show you what we were looking for. The market to get to around 127.77 was the number that we were looking for. And if you'll get this chart up here today, you'll see that the high today, I believe, was 127.68. As I recall. So that's pretty close. Now, those are just patterns. They repeat over and go over again. Sometimes they work. Sometimes they don't, but they work more than they fail. And when you're using a tiny bit of risk management, then you're going to be better off. Now, we have a couple of trades that are outstanding here today, folks, that I need to bring to your attention. One, of course, has been the British pound. If you remember, those of you that belong to 24/7, we were looking for a sale up there at that 139 level in that hourly chart of the British pound. That's now made its objective of 150 pips, which is $900. We decided to take that off. They went a little bit lower. Now it's back to the same place it was before, but that was a profit objective that we wanted to lock it in. And the main reason is we've got some higher bottoms in here. High in Apple has been 127.47. Okay, thank you very much, Danny. But basically that British pound trade is now over. And the other one we want to take a look at is the euro. We'll take a look at this. I want to show it to you in two different ways. One of them here, let's get this up here. Where is it? I think this is it. Oh, shut the front door. Did I do that wrong again? No, I didn't. Here we go. Here it is. Here's the euro on a 4-hour chart. This is one of the ones that we mentioned in the newsletter. The fact that we could get a 382 retracement here. We've had a 6-day rally. Folks, this stopped within 5 pips of the exact 382 retracement this morning. It hit at 119.15. We backed off about 50 pips since that level, but that was spot on. It was also 78% retracement from the high on March 18th. So that tells us this trend in the euro is still down, i.e. the trend in the dollar index is still up. So as long as we don't get above 119.20, this euro has more to go to the downside. We've had a nice rally that big ABCD ended down there at 117.10, and then we rallied up 200 pips. And now what we're looking at is to see what the retracement's going to be. But any move above that 119.20 now would be rather bullish in the euro. So, let your limit minders tell you that that's happened, because that will give you an idea that these markets are, moving higher. So those are just a few of the things that we're paying attention here this morning. But it's very important. Both of those positions should be watched very, very closely. Your risk here if you did the Apple trade, your risk there is, basically 20 pips right now. You put your stop at break even because it's already backed off about 50 pips, so you wouldn't have to risk, very much at all on that. But I think the most important thing that we have going on today is the fact that we've had 3 days in a row where we've had those 20-point corrections, Sunday, Monday. Well, Sunday, Monday, Tuesday, Wednesday, there's been 4 of them. So it's going to be interesting to see here if we get below, you take 20 points off the high at 75. If we see a trade below 40.50, in the S&P, that's telling us that there's going to be a more significant correction than we've already had. So right now we're trading 65, 66, 40, 65, 40, 66, and that's held relatively well so far. We're only able to back off about 13 points from the high, but it's still, real early in the day. We've got still 4 more hours of trading to go on here. All right, I wanted to make sure we covered those 2 things most specifically, because those are something that I think we're watching. Also in the copper market, this is an update from where we were here just a day or so ago. We got up to that 61% retracement again. We backed all the way back to $4.02 in the copper. We backed up a little bit now, so it's still in a downtrend, has not taken out those highs. So it's important to realize unless the copper can get above 420, it's still in a shorter term downtrend. Longer term, of course, it's been very, very bullish. Let's talk just a little bit about what David White has done for us here at TFNN. He has this service that they send out the charts on this. This happens to be the ETF for the Platinum Trust. You'll see that that's a perfect Gartley pattern, setting right up at the 61% retracement level, just absolutely spot on. This is the ETF, of course, but if you're a futures trader, we want to be watching those also, because you're going to be seeing the same pattern in the futures that we're seeing here. Where is it? Please tell me I did. I know I did this thing, because I wanted to show the comparison that it was so spot on that I couldn't believe how. Well, anyway, they're exactly the same. The platinum has broken well over $30 an ounce today. The ETF, of course, moves a lot slower, but it was pretty much spot on what we were looking at here for the market at the top, much like what these patterns are showing us by David White's service. And it's really a great service, folks, especially if you trade stocks and ETFs. He puts all the butterflies and Gartleys automatically. They come out, and you can take a look, pick the ones you want to trade. But they're pretty much spot on, and they're very, very good to really watch here. When we get back from the break, we have Arch Crawford as our guest today, folks. Crawford Perspectives here in Tucson, Arizona, and he'll be our guest at the break. So we'll be chatting with him a little bit. And when we get back, I want to take just a second to talk about natural gas.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the opening call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we have Mr. Z from Philly on the line. John, how are you?
Larry, I'm doing very well. Thanks for taking the call.
Well, thank you, sir. You were very lucky. There was a last spot available, so you should play a lottery ticket today. I think this is your day.
Get them while they're hot.
John, I posted a chart here of the Christmas corn. That's the new crop corn that hasn't been planted yet, but you can see it's been in a very, very strong trend, and that big gap up that we had where it went limit up after the report we had a week ago. This looks extremely bullish now. The older crop now, it's under some pressure. Not much, of course, but we're seeing pressure in nearby soybean contracts and the nearby corn contracts and also wheat. But the new crops are extremely bullish. I mean, there's basically no wiggle room this year. I mean, they can't even have 2 hot days of weather, or there's going to be some problems with the crop, isn't it?
Yeah. I'm looking at your Dees corn chart in the Tiger's Den. Thanks for posting that. Leaving those thoughts of how much corn we have or don't have aside, when you look at that chart alone, do you see a trade there? I wanted to ask that first question, please.
Well, you could, because you have a potential 3 drive pattern, but has no symmetry there. I mean, you really don't. You need the highs to be equal, and they're not. But the fact that you had it got up to 495 on that really bullish, was trading at 483. So if you wanted to sell it, you have to put your stop 12 cents higher. So you could certainly do that. That gap will be filled, which is down about 8 or 10 cents from where we are right now. But frankly, there's just so many other things that look easier to do than this one. So I prefer to sell anything, I prefer to sell the old crop and also the old crop beans. They're much weaker because they're making lower highs. This one's making higher highs. So I try to go where there's, like if you're the lion goes for the weakest sheep in the herd. So a flock, I mean. So that's what I try to do, is find ones that's the weakest, and that would be the beans, old crop beans and old crop corn. That's what I would be looking for.
Yeah, I appreciate that. I very much like that idea. It's always worth repeating the idea of don't force a trade. If something's not obvious, don't push it. There's other things to look at. What I'll just share with you, I am long, just in looking at that Dees corn contract, I am long the contract that I bought right around, I think it was October 29th. So that's down at the 385 level. And, of course, it's a big winner, of course. I'm holding that, and I've got a special tactic I've been employing since January. Namely, when we get to an area that looks like it's potentially topping, but we're so far away from the growing season, I've resisted the temptation to sell it and book a big gain, and instead hold it, and then just take a second contract and say, I'm just going to scalp short something. And if I'm wrong and it continues higher, take a small loss. And if we break it for a day, 2 or 3, I'll cover it quickly. And that is the process I've been using for this contract and the new crop soybean contract. And I'm doing this, has been successful in that I've captured a couple of, 1 to 3, 4 day pullbacks, covered a scalp short for, a modest gain, and held on to that October buy as it's made higher highs. And I'm continuing to play that game, and at some point in time, a major top will be put in place, and we break hard, and we just don't come back. And hopefully, I will have on a second scalp short position that I can essentially just pair off against that October buy. So that's the game that I'm playing, and I very much like that idea that you just shared about, as far as a trader, looking for shorting that May contract of beans and corn, as both of them are clearly at higher prices, and those are starting to make lower highs, which, of course, is a pattern we all look for to give us a sign or at least a clue of the end of a major bull market. So thanks on that, and as you rightly pointed out the past couple of days, if we do get adverse weather, either in planting or growing, that new crop bean contract, currently 1270 area, that could go to 15 or 16 easily as far as I see it. But that's all, that's Mother Nature and weather, and I'll leave that to her because she's not telling me.
She doesn't tell anyone for sure. But that November contract, you can see trading at 1270. It's made new highs. We've been here for 3 days, but it hasn't backed off. That's telling you that there's not a lot of selling up here. So the one to sell would be the weaker, the nearby May or July contracts. But I like that scalping in and out of that, because when you have a position that's got you have a winning position, there's so many things you can do with it that it's when you have the loser, you have to be concerned about how big the loser is going to get. What have I done wrong? How do I get out of it? When you got profits, it's a totally different mindset, and you certainly handle it the right way, my friend. So I certainly appreciate you calling in and telling the folks what you've been doing. And John, they really do appreciate you here at TFNN, because you were spot on the corn and the beans and the wheat when they were making the bottoms, and also the copper. My goodness, you took almost every cent out of the copper. I mean, and you're still in it, aren't you? You're still basically long copper, aren't you?
Yes, in fact, I rebought it this morning. Yeah, no, that I made a pact with myself last March, April, and May, when everything sold off so darn hard. I committed to myself to get, to start bottom picking in a bunch of commodity markets that looked like they were potentially forming bear market bottoms. In the case of that copper, of course, it made that exact double bottom at 195. I was actually late getting involved with that. But, over the past 35 years, Larry, I have found my biggest weakness was buying a market low, buying it right, and getting off of it too damn early and not milking it for all she's worth. And I was remembering that, in May, June, July last year, saying, now, if I found something, I got involved right, keep trading it, don't give up on it. And, of course, that paid off very nicely, from July through January, February, March, and the ags, first and foremost, and copper and platinum, for that matter, in addition. So that's just what I'm doing. And, of course, these bull markets, they're going to top out at some point, and hopefully the trading tactics will be sufficiently good to get me out and standing aside when those occur.
Well, please let us know what you're doing in the den, folks, because if you want some great information, go to the Tiger Den. Got some stuff. John, God bless, my friend. Be safe, and we'll talk to you soon.
Thanks for having out, John.
Stay tuned for Arch Crawford, folks.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I believe we have Arch Crawford in the house. Arch, how are you today?
Yes, fine. How are you?
I am good. Arch, I want you to do something for me today. I want you to add 10 days to the 7th of April. And what day does that come up?
17 April.
Oh, now that is a very important. I believe that was J.P. Morgan's birthday?
That was exactly what it was.
And who else's birthday was that, Arch?
I guess it was mine.
Yeah, it sure is. Folks, we joke about this all the time. We've been friends for, 40 years. But we've been to the Morgan Library on 42nd Street there in New York. And Morgan his library had a ceiling, just his incredible celestial ceiling. And there was a trap door. Well, not a trap door. There was a secret door that came down from the residence into that library. And that was right over his sign, which was on the 17th of April. If you ever go to New York to see that library, make sure you go in and look at it and ask to see the...
Make sure you go to 36th Street instead.
Yeah, 36. I'm sorry. I don't know why I said 42nd Street. I know why. It was because it's where the Lexington, 42nd and Lexington was where J. Walter Thompson was, and I worked there for Lilly for 3 years. That's why I said 42nd Street. But hey, Arch, you have a cell signal in place, don't you?
Well,
in the market?
I have still watching for the cell, and I haven't gotten the full cell signal yet.
Okay.
I'm still on the short side with the SPX. So the Dow was stopped out. I was also short this Dow previously.
Okay, and you mentioned for the first time, I think, in your letter was the Bitcoin. You're following cryptocurrencies now?
I mentioned Bitcoin for almost 2 years.
Oh, I'll be darned! I didn't realize that. Well, of course, I do look at the letter, but I'm not involved in cryptocurrencies myself because it's so far over my pay grade. But boy, there are people into it. I think we're getting close to 60,000 again in the Bitcoin. So there's players coming into that market. So I guess it's going to be for real. So
actually, it's down 2,100 today.
Oh, it is okay.
650.
Ah, okay. Well, it shows you how closely I follow that stuff. Arch, the question that I have for you, and I'm glad you're on the show today, is that we have these things called Reddit and all these Twitter and all this other stuff, these social networking things. Are we seeing the same type of phenomenon that we saw in 2000 with the .com folks?
Well, this is the first time I've seen it such big print on the first page of the Wall Street Journal. It says, white hot U.S. stock rally masks massive value swing. And that's on the front page above in the top half. And the other thing that's in the top on the same page, front page of the Wall Street Journal, it says Credit Suisse hit hard on fund debacle. That's a big deal. They lost $4.7 billion.
Yeah, that's what they think they lost. They don't even know the exact amount of the loss. That's because it's supposed to be pretty big. Just like that guy from Singapore that went negative on the crude oil back in February. With $27 negative in crude oil. That was certainly a great place to buy it. Arch, one of the questions someone's asking this question in the den is you've been doing this astrology for a very, very long time, and if you had to put your finger on it, what would you say would be the missing link that you've looked at that you've not been able to put a handle on? Is there such a thing that's the question that he's asking? Is there a missing link that you've missed?
We don't know why it works, but it does. These events do tend to affect people's psychology. And that's proven. That's very high statistical probability.
Yeah, well, that's for sure. Now, when you were first starting cycles, you started way back in New York, back in the '60s, with Bob Merrill, wasn't it? No, Bob Merrill. What was his name?
Bob Farrell.
Bob Farrell. And you began looking at the Foundation for the Study of Cycle stuff, and Dewey was doing astrology during that time. Did you ever meet Edward Dewey?
I don't think I did, but his chief astrologer person was David Williams, and we both knew David Williams.
Oh, yeah, well. He was here in Scottsdale, Arizona. My goodness, yeah, Commander Williams. Yeah, he was very good at it.
He was in Florida the last few years, and actually I went down and visited him there, and I had some friends that had made some money in the markets and had a boat, and so we took him out on the boat, on this guy's boat, and we went to a nude beach, and we were having dinner with him later, and he was on the phone with a friend and said, naked as jaybirds they were.
Yeah, well, haven't been one of those before. Fact is, I stay away from those beaches, any kind of beaches, because that's too close to the water, and I don't care if I remember when I wrote my book, Astrocycles: A Trader's Viewpoint, he endorsed that book for the American Astrology Association, and that really, really helped me with his endorsement. But a real gentleman he was, and I really enjoyed the time that I was able to spend with him, because it was toward the end of his life, and but he was still sharp as a tack.
He was sharp as a tack and died at 96.
Yeah, I know.
God
he
bless
was.
him.
Yeah, he was certainly in his A game his whole life, which was really good. Arch, are you seeing anything in the crude oil market that's interesting?
Crude oil. Let me see. I forgot what page it's on. Oh, here it is. The crude oil market, you mentioned that it dropped down under $5, or it went negative, actually.
Yeah, $27 negative in the
April
February contract.
2020.
Yeah.
And so we are the highest they've been since then, last week or a couple of weeks ago. They went over 65 in early March, and they backed off now to about 58.5. They're down 87 cents today, but they look a little toppy, and they're under the 50-day moving average right now for the second time since the November last year's low. So it is losing momentum right now fairly badly.
We're going to have to pay a few bills here in just a second, but I wanted to ask you, can you come back for the second segment, please? Because I do want to spend a little bit of time with the gold market, because that's one of your famous specialties. And in fact, I have met many people that can trade gold better than you have, Arch. You've done a fabulous job. I can remember when I first moved here in '95. When did you came here in about 2004? Wasn't it 2005 when you first came?
1996.
It was that was the same time. That was the same year that Mark Douglas came in. I remember the gold was now breaking below $300, and I remember you said, "I'm going to buy it all the way till it stops trading." And he said, "Because it's going to be someplace above 1,000 soon," and it certainly was. Hey, stay with us, folks. Arch Crawford, Crawford Perspectives, with us today. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks. We're talking with Arch Crawford of Crawford Perspectives here in Tucson, Arizona. We're about 2 miles from each other. Arch, the question that I'm asking from people on the gold market, if you were buying physical silver and physical gold, what is your preference if you had to buy physical gold or physical silver?
I would say the physical gold is probably the more important, but the silver tends to move faster and has got more risk as well as more potential gain.
Mm-hmm. And they're very hard to buy now. The silver rounds, you can't even find them in here in Tucson. I mean, I went to a couple of coin shops over the past week or so, and they had a few 10, 15 coins. If you wanted to buy anything, you had to wait. They say anywhere from 6 weeks to 2 months to get the silver rounds. But the gold, they did have the U.S. gold coins. They had all the way from 1/10 of an ounce to the 1 ounce golds, which are really nice. But the premiums, have increased quite a bit because evidently they're harder to get also. So there's some kind of a short supply. But
I have some I'm willing to sell at double the price.
Oh, okay. Let's write this down. Unless you can contact Mr. Crawford here. Well, you're very generous. My goodness, Arch. I really think it's quite nice. Everybody would like to do that. Arch, do you have an upside projection on gold?
Well, it hit the peak in early August, up around a little over 2080, and it's been drifting lower ever since. And it hit the low so far in early March, came back down almost that low in late March, and is now looking a little better, but it's also facing a declining 50-day moving average, about $20 higher than that. It's 1742 right now, and it's a little above that as we have this declining 50-day. So maybe it will spend a little more time in this range that it's been in the last month.
Wow,
and when it breaks down or up out of this pattern, it'll get a much more solid move, and I suspect up.
Okay. Hey, Arch, I want to thank you for joining us today. And how would the folks reach you if they would like to get a sample of your newsletter and contact you?
Email is crawfordperspectives@earthlink.net. And I'm in the phone book on Crawford Perspectives in Tucson, Arizona.
Yes, sir, you are. Indeed, you are. Well, we'll run into each other again soon at Trader Joe's like we usually do. Hey, tell Joanne I said hello, my friend, and we'll have you on again in a few weeks, okay?
You know, I married a girl that worked there.
Yeah, well, no kidding.
I met there.
You're a prince among men, my friend. Thank you for joining us today, Arch. We really appreciate it, buddy.
Blessings.
And I'll be calling you on your birthday for sure.
Okay,
April 17th, folks, the same as J.P. Morgan. You know, Arch, did you know that I was born on the same day as Ralph Elliott, July 28th?
Well, that's something. Hey, we're right in there with some of the best.
Yeah, I think the funniest thing, when I moved to California in 65, my phone number in Westlake Village was 213-889-1618. And I didn't even know what Fibonacci was until 1970. So that was
it was in your soul package.
Got it. Hey, listen, thanks for joining us, Sam. Archie, we'll talk to you real soon, okay?
Very good, sir.
You bet. We have a caller on the line from Minnesota. Timothy, are you there?
I am. Hi, Larry.
How are you, Don? Your question is, when will these corn fill the gap? Is that correct?
Well, more specifically, if it doesn't fill today or tomorrow, when is it considered then to be a breakaway or a measuring gap?
Well, the only way it'll be a measuring gap from here is if it explodes to the upside. In other words, it doesn't fill the gap, and in a few days it just starts going higher and higher, much like we saw at Google. Yeah, that would be a measuring gap if it did that. But right now, I'll be surprised if it does, but I get surprised a lot. So it has to break away to the upside. We've been here at the same high now for 3 days. I mean, we're right around the 494 level. We're trading at 489 today, and it's just really very, very, very quiet. But to find a gap on a corn chart, you have to go back to the time of the Babylonians to find one of those, because they don't need gaps. That's a huge market. That's our largest crop here in the United States. And that certainly tells you that, there's some big things going on over there anyway. So anyway, I would watch that very, very closely because, it's trading at a 50-cent discount to the nearby. So it's going to be needed. We have to have a good crop this year. We're going to see prices that we have never seen before. We could see $10 corn because there's only so much.
Additionally, Larry, we have a USDA crop production report out on Friday at 11 a.m. Central.
That's a big one, you bet. That'll be a big one, yep. It'll probably do, if it's anything like the others, Tim, they'll probably reverse everything it did on the last one. They have a tendency to fooling people that way.
Thanks for taking the call, Larry.
Hey, Timothy, me too. And enjoy your 3 days of summer that's coming up, okay? July 3rd and 4th, I think those are your 2 days of summer in Minnesota?
Yeah, they're usually good ones.
Okay, my friend. Thank you for calling in. We really appreciate it. Okay, folks, let's move on here. We wanted to cover a couple of things. I wanted to just remind each other, this is the pattern that we're looking at in the E-mini S&P. We'll get this up here so we can take a look at it. We're trading pretty much where we looked at here the other day. That we're trading around 40, just a little below 40.70, I guess, today. But you'll notice this is a daily chart, and you'll see the big breakaway gap that we had on Monday. That was because of the fact that we had the report that came out Friday, and there was no trading, and then they came in and we were up 60 handles. It didn't get any higher than 40.75 so far, but the most it's backed off over the last 3 days has only been 20 handles, folks. So until it gets below 40.50, it's still trading in a very, very strong uptrend, and look to buy $20 retracements. We had one We had one Sunday, Monday, Tuesday, and we had one today. So, I mean, that's 4 in a row. So we'll see what happens with it. But that's what looking at. The little cycles that you're seeing on the bottom, that is nothing more than a simple time count that I counted 9 days up in the run. There was a 9-day up in the AB leg, and there's been a 9-day up in the CD leg. That comes in today. So the time is correct. Whether that is important or not, we don't know, but that is absolutely correct. One of the factors that you have is when you're a technician is you don't have to worry about what the fundamentals are. You just look at the chart, and it's going to tell you at least where you think you are. You might not know where you are, but at least you think you're there, and you can put your stop in, and you don't have to worry too much about it. So those are just a few of the things that we're watching here this morning here. We got to pay a few bills here in a few minutes. We come back. If you have any questions, it's 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, I've had a question. I posted a chart of that British pound trade that we did. You can see the ABCD pattern up there at that crest, and there's also a 3-drive pattern in the background, as you can see. That's what we were looking at. We had several things that said, yeah, it shouldn't get any higher than this, so we had a place where we could sell it, put a stop in, and then I had to decide, where to take the profit. And you'll notice that black trend line that I did there, that's the 61% retracement. That locked in $900. We were risking roughly $400 on that. So that makes 2.5 to 1 for the winning trade. Now, the question that person asked, why didn't you just let it ride? That's always something that I have in the back of my mind. But when I have the folks at 24/7, the Fibonacci service that we have here at TFNN, I try to book profits for you because, to catch these big monster moves, we've caught a couple in gold these last few months. We're flat the gold market right now waiting to buy it. We just took a really nice profit in silver, but to let them ride, it's really hard to do. And so I have to book some profits along the way. And believe me, folks, it doesn't bother me at all because I was, in fact, happy that I didn't get stopped out and took a loss because those happen too. So you have to make a decision. And my decision was because I had made the profit objective that I felt it was time to take the trade off. And that's why I did it. Now it's done. I forget it. I move on to the next one. And I'm certainly not going to worry about it anymore. That's it. Just shake it off because it's history, and history is a mystery, so we don't have to worry about what I'm going to do tomorrow because that doesn't make any difference to me anymore. But I will be watching the buy point in the gold, and also we'll be watching these grains, especially these new crop. When we get we will get a break in the future, probably after this report that's coming out, and we'll be looking to be a buyer of that new crop stuff. And right now we've been selling the nearby, but that's neither here nor there. So those are the few of the things that we're paying attention to here today. So live every day in an attitude of gratitude. And we have Stan Harley tomorrow, folks. Harley Stock Market Letter tomorrow.